the consumption, even though the number on the surface is relatively weak, but we are still cautiously optimistic about the Golden Week holiday consumption. Reason being that the outbound travel has been cut down tremendously. Just imagine during these long holidays, Chinese usually go outside China. At least the upper middle class or rich Chinese families usually travel to, say, London, Paris, or even the US for shopping for holidays during this period of October holidays. But that has stopped. That has stopped things. So I think this will create incremental demand in terms of domestic consumption. And Macau, as far as I understand, is probably the one area that's completely open to Chinese tourists, and with no quarantine either way. So Chinese going to Macau, no quarantine. They're coming back to Macau, no quarantine. Coming back to China, no quarantine. I think that should be a plus.
Yeah, and these talks have, I mean, look at those price falls essentially year to date. They've been pummeled out of shape essentially. I just want to understand actually about your own stock ideas at this juncture.
Yes.
Where is it that you would find value in China? If you look at the rebalancing of the Hong Kong index that is underway, I think the broad messaging that's going out there is that there is more to China than just Chinese tech. But where can you go about searching for value?
Yeah, value and quality. We don't just invest in cheap stocks, but we try to invest in a high quality company. Our strategy doesn't change much in this environment. But we do have some tactical so-called shifts, meaning that first of all, it makes sense that we need to avoid these so-called regulatory risks as much as possible. As I said, the blunt of this regulatory pressure is actually on big tech internet firms, even though it is also spreading to other sectors like healthcare, real estate, and even financial services. But for those sectors, regulatory pressure has been fact of life for a long time. So there's nothing really new here and nothing incrementally significant. But back to our tactical positioning, we continue to like a stock like Lead Intelligence. This is a manufacturer of equipment for making lithium batteries and fuel cells. It's trading in A shares. It's part of the new energy supply chain. And in terms of policy risk, this is actually on the positive side of the policy risk, because you see that globally, we see more support for new energy, green finance, and electrification. I would say this is a global trend. And also, like I said, there's also positive support from the Chinese government because the attention to climate change. And this company, by the way, is also benefiting from the home court advantage. What do I mean by that is, if you look at the whole electric vehicle supply chain or the solar energy supply chain, which is the downstream of this company, a lot of that's already in China. Increasing proportion of that manufacturing is in China today. And China, you can say, is now at the center of all these new energy equipment manufacturing. And this company also beat earnings in the first half, really strong numbers.